Essar Global Fund Limited recently completed the sale of Aegis USA Inc., a major outsourcing company in the United States, the Philippines and Costa Rica, to Teleperformance through AGC Holdings Limited, a wholly owned portfolio company of Essar Fund. Aegis USA represents revenue of US dollars 400 million and has more than 19,000 full-time employees across 16 centers in 3 countries, serving premium clients in the US markets in various key growing industries such as healthcare, financial services, travel and hospitality. Aegis will retain and continue to grow the remainder of the BPO business globally across India, Sri Lanka, Malaysia, Australia, South Africa, Peru, Argentina, Saudi Arabia and the UK.
Essar is sold off Aegis US Inc., which is our operations in the US, Costa Rica and Philippines. We sold this for $610 million US dollars, and we've sold this to Teleperformance, which is one of the largest standalone BPOs in the world. I think it was a good fit for Teleperformance because it grows the Philippines business and it gives them an entree into the fast growing areas of healthcare as well as financial services, which has always been a major BPO vertical. And as far as Aegis is concerned, Aegis grew this business very fast in the last few years. The business became a very mature asset, and it gave a great time for Essar to monetize the asset at an excellent value. Look, Aegis has grown at a tremendous pace. It is one of the fastest growing BPOs in the world with a very, very high, over 30% compounded annual growth rate. And Aegis grew by a mixture of organic, inorganic growth. And our strategy always was 2 things. One, having a global delivery model, which is we will be where the customers want us to be, and a strategy of right shoring, not necessarily offshore or onshore, but be right shore. And Aegis did this by acquiring. We acquired People Support in the Philippines, we acquired UCMS in Australia, we acquired companies in South Africa and Argentina, and organically growing. So when we acquired People Support, it was 5,000 people. Today, when we are selling it, it is 14,000 people. Organically, India has grown. We made acquisitions in India in 2005-06 of companies like Customer First, but then organically we grew it from 2,000 to 25,000 people. We also use a strategy of joint ventures that we've done for STC in Saudi Arabia. So I think it's been a mixture of organic and inorganic growth, customization to client requirements, the right shoring strategy, and a global delivery model, which has really brought Aegis right from 2004 when we were at 50 million to 2014 when we were 800 million. So the future plans are that, look, we want to now focus on the fast growing areas of Asia Pacific, Middle East and Latin America. As far as Asia Pacific is concerned, we've already had Malaysia, an acquisition in the month of March and April. Malaysia for us is going to be the hub for Asian languages, also an alternative to English for the Philippines. We're looking at Korea and China. So we have a huge presence in the Asia Pacific region, and we will have a first mover advantage because we are the first major global player in Malaysia. Similarly, we want to grow our presence in the Middle East. Our Saudi joint venture is already about $100 million. We believe there is huge scope in the rest of the Middle East as well as to grow in Saudi. And the third thing that we are doing is in the Spanish market. After the English market, the largest market is the Spanish market. We are in Peru and Argentina. We're looking at an acquisition in Spain, which will help us grow the market for Spanish, both in Europe as well as in LATAM by a huge amount. So I think that is our strategy as we go forward. And I think we're lucky to have a parent like the Essar Group, which has always encouraged us, helped us. We have used their balance sheet to grow. And I think with the active support of the group, we believe that we can immediately grow back to our original size, if not larger, on the backs of these fast growing markets.